Hello and good evening. You're welcome. This is Business Now, supported by Absa Bank Uganda, and Absa Bank's digital loan initiative is now transforming access to finance, enabling you, its customers, to quickly secure financial services digitally. And that is from anywhere in the country and at any Absa branch. On the program tonight, global markets remain on the edge as investors await the outcome of the US-Iran talks taking place in Pakistan. Back home, our cameras were live at this year's Judges Colloquium at the Serena Chigo Hotel in support with the central bank and what they revealed about the direction of interest rates. Plus, we continue our coverage of the proposed tax changes and what they could mean for businesses and consumers alike. And in capital markets, the regulator has partnered with Nation Media Group to drive financial illiteracy and deepen investor participation. Malcolm Sime, let's get into the details.
How then do they compensate for the person who has defaulted? Is to increase the interest rate so that then the few who pay can compensate for the many who default.
Let's first have a quick look at the top global business stories being hotly debated in the markets. A sharp escalation in the Middle East tensions is rippling across global markets and threatening growth and reigniting inflation risks as oil supply disruptions intensify. With crude prices surging and key shipping routes constrained, policymakers now warn the shock could shave up to a full percentage point of global output if prolonged. A renewed spike in energy prices is pushing inflation back to multi-year highs, complicating the path for central banks already constrained by fragile growth. So the latest data shows price pressures accelerating faster than expected, raising doubts over imminent rate cuts and reinforcing concerns that the global economy may remain stuck in a higher for longer interest rate environment. Markets recalibrate to a geopolitical-driven era because investors are increasingly reshaping portfolios around geopolitical risks and prolonged instability shifts. Now, the drivers of global markets away from traditional economic fundamentals, from energy exposure to emerging markets and defensive technology stocks. Asset allocation is now being redefined by conflict fragmentation and the growing limits of central bank policy. This is Business Now, supported by Absa Bank Uganda, and Absa's digital loan initiative is currently transforming access to finance, enabling you, its customers, to quickly secure financial services digitally from anywhere in the country and at any Absa branch. The Chief Justice, Dr. Flavia Nzeja, has called on the judiciary to speed up bank-related cases, saying delays are pushing up interest rates by forcing banks to recover losses from defaulters through other customers. At the second Judicial Colloquium on Finance and Banking today, Bank of Uganda Governor Michael Atinge-Ego warned that 2 trillion shillings is currently tied up in 623 unresolved banking disputes, money he described as dead capital that cannot support economic growth.
Maybe one of the things we never get to know is that a loan default has an effect on the interest rate you pay. That's what we never get to know. When commercial banks do not recover loans, maybe let me tell you, there is what we call portfolio at risk. The abbreviation is called the PAR. That portfolio at risk, when there is a loan default, the central bank here there is something we call aging. So you have to age that loan, and they have parameters. So if the default is for a period, then they have a percentage which you must provide as a bad debt. In other words, when there is a default, they make a provision for bad debts. A provision for bad debts is actually an expense in accounting terms. So it's an expense. So at some stage, actually, if the loan has not been paid, then it is declared as total loss. So in other words, they declare it 100% loss. But remember, this bank must remain profitable, and actually if it's not profitable, they are worried that he's going to come over and take over. So how then do they compensate for the person who has defaulted? Is to increase the interest rate so that then the few who pay can compensate for the many who default. So you have a very big role to play as judges to ensure that when these cases come before you, resolve them as fast as you can. Because that interest rate you are paying, you are responsible for its being high if you don't resolve the cases fast. I thought I should make that clear.
Currently, it is reported that about 623 unresolved banking cases are locking up an estimated Uganda shillings 7 trillion, according to the Uganda Bankers Association, in disputed value. For the economy, this is dead capital. For banks, it means capital is tied up in provisioning. Under our prudential framework, a non-performing loan triggers a mandatory provisioning the moment the borrower defaults. This is a supervisory obligation, not a choice. Every shilling locked in a disputed loan is a shilling that cannot be reinvested into the productive sectors of our economy. So just imagine 7 trillion shillings is locked out of productive activities. Therefore, every delayed judgment is effectively a tax on the investment and a brake on the transmission of monetary policy itself. So ADR is no a lesser substitute for justice. We see it as a sophisticated complement that recognizes speed, technical expertise, and confidentiality, which are necessities in the commercial world. In the financial sector, disputes are highly technical and time sensitive. ADR mechanisms, mediation, negotiation, and arbitration offer a way to resolve these complexities without adversarial depletion of funds. That's why ADR is not merely a justice sector matter. To us, it is a macroeconomic imperative that is required to achieve our Vision 2040 and the ambitious tenfold growth agenda. According to the Uganda Bankers Association, they project that private sector credits that is needed to support the tenfold growth by 2040 is estimated at Uganda shillings 490 trillion. This of course assumes that the factors that are currently underpinning the unresolved banking cases locked up in the judiciary are addressed, and they remain so. It is therefore important that this is not only achieved and preserved, but that the private sector activity as an engine of growth is further unlocked.
Economists are up in arms over the proposed taxes on the mobile money withdrawal, which they argue will hurt the growth of digital payments. Notably, the controversial proposal for the new 0.25% tax on all cash withdrawals, including bank and ATM, was dropped following public and businesses' pushback. However, the existing 0.5% mobile money withdrawal levy remains continuing to affect liquidity for many small enterprises. And this state of affairs, according to the Federation of Small and Medium Enterprises, could significantly influence operating costs, cash flow, and profitability for micro, small, and medium businesses across the country.
The Federation of SMEs has looked at the tax proposals that government has presented through the bills to Parliament, and we are concerned about two major issues. The first one is that the 0.5% excise duty on mobile money withdrawals still stands. Now, the challenge with this is that Uganda is only one of many peer countries that has this kind of tax. Many countries have a tax on service fees, but not on the money being withdrawn itself. Kenya has an excise duty on service fees. Rwanda, Ghana, Zambia, it's only Uganda that has a tax on the amount of money withdrawn. Now the challenge is that it's making transactions expensive. If you consider that 50% of all financial transactions go through mobile money, this is counter to the digital economy roadmap that the government has set out. If you look at the National Development Plan 4, if you look at Vision 2040, if you look at the fact that under NDP4 government wants to reduce wants to make it easier for people to transact and operate in a cashless economy. This kind of taxation regime is contrary to this aspiration. We are therefore proposing that government start by reducing this excise duty to 0.25%. Secondly, we are asking that government ensure horizontal equity across the financial sector. This tax is only applicable to mobile money withdrawals. It's not applicable to withdrawals from ATMs. It's not applicable to withdrawals to agency banking. This is unfair. A taxation regime has to be fair. It has to treat people equally. That's the only way that we can ensure horizontal equity. So we are therefore proposing that government reduce this excise duty to 0.25% and that it applies across the financial sector to ensure that there is equity. Otherwise, the present scenario punishes the poor. If you look at the people who transact through mobile money, most of them are low-income earners and MSMEs. Now, if you find that those who transact through banks and ATMs are fairly wealthy people, now this the current practice penalizes the poor, makes it more expensive for the poor and MSMEs to transact in a cashless economy. We are therefore proposing that government reduce this excise duty rate to 0.25%. Someone may ask, but government is going to lose revenue. How are they going to make up for the loss? We are saying that when the excise duty rate is reduced, more SMEs will start using mobile money, will resume actually, because many of them had given up. You will see more digital businesses emerge. You will find that at the end of the day, the telecom companies will collect more money and they will pay more taxes into the coffers. In any case, government will find it easier to roll out systems like IFRIS and so on because more people are online.
And finally, despite strong efforts by Capital Markets Authority, which has reached over 20 million Ugandans through investor education campaigns, financial literacy gaps continue to limit participation in stocks, bonds, and unit trusts. So today, only about 273,574 Ugandans hold securities accounts, and collective investment schemes or unit trusts have attracted over 180,000 to 206,000 funded accounts, managing roughly 5.6 million trillion Uganda shillings in assets, with Uganda's population of around 52 million. This means capital markets penetration remains below 0.6% of the population. Now, Nation Media Group and the Capital Markets Authority have, to this end, penned a deal to deepen awareness across the country.
NMG team, welcome to CMA.
Thank you.
We're very delighted and excited about our partnership. The Nation Media Group has been part of the journey of Uganda's capital markets since inception. You've been part of our journey. And specifically in terms of being a voice for matters capital markets. I think NMG has been a voice. 30 years so far. I think we're looking forward to many, many more years doing this. Until Jesus comes back.
Nice.
We're excited about partnering.
Yes.
We're really excited about our partnership. The mutual benefit that will accrue to both organizations.
True. Very true.
And being a public interest entity.
Yes.
When we speak, we speak as a public interest entity.
Yes.
So when you talk about mutual benefits,
Yeah.
we're actually talking about the benefits that will accrue
Yes.
to the public because we represent public interest.
Exactly.
Okay, so this partnership basically, we believe, is in the interest
Definitely.
of the public.
Yes.
And so, we're looking forward. We're looking forward to working on, initiatives
Thank you. Yeah.
that will promote Uganda's capital markets,
Absolutely.
deepen
Yeah.
it, and at the same time contribute to, the growth of, Uganda's media space.
Yes.
So this should be mutually beneficial.
Absolutely. I think I will agree with you on saying that, like right now there's a much greater appreciation of what CMA does and a greater understanding of the role in their role, obviously, in public interest. We are not that market anymore where people can just come up with Ponzi schemes and all that without, CMA coming in and saying, hold on, guys, this is not the right way to do things. And obviously, over the years, we've seen the development of our capital markets. And so to see that you've done that over 30 years, starting from a place where people are like, what on earth is that? And then, coming through the different leadership transitions that you've had, and to see where you are today, I commend the Nation Media Group and our business teams for the tremendous job that they've done in supporting you in this. And obviously for us, our mission is to positively impact society. And so partnering with you over the years, and now even on your 30th anniversary, it gives us an opportunity to fulfill our mission in terms of that. So we are also looking forward to what we are going to work on together, and we trust that by the time we are done with this partnership agreement, that, like you've said, will have mutually benefited. Obviously, for us in terms of our audiences, and giving them this information that they actually need to be able to make the right decisions, but then also to develop the capital markets even further, like you've said. And then, of course, by the time we are done, for people not just within Uganda, but the region, to actually, because these days capital markets, it's, we're looking regional, and then to look at what that impact will be at the regional level as well, because we are a regional media house, East Africa's largest media house, and so we will be glad to, tell the stories across, and believe that your objectives shall be fully met as well in this celebration. So looking forward to even the investment week and seeing that we can do great things together. And I think for us as well, a learning for us, because learning never stops. Learning never stops. And so so thank you again for the partnership and for the opportunity to work together on this great milestone.
That's all we had for you on this edition of Business Now, supported by Absa Bank Uganda. And Absa's Digi Loan initiative is transforming access to finance, enabling its customers to quickly secure financial services digitally from anywhere in the country, and at any Absa branch you can ask about that service. For more business discussions and updates, follow me at Malcolm Sime on X, and catch a replay of this program on our YouTube channel. And don't forget to subscribe. Next up is MTV Tonight. Thank you for watching, and good night.